Inflation stories come and go in the mainstream media as if it were a simple weather report. Let's dive into why inflation, aka monetary debasement, is a permanent and growing storm. I have a few clips that you gotta see from some familiar faces. A bit of good news, bad news, and even someone completely missing the mark. Let's get into it in another Swan original. It's Sir Ulrich and my signal meter is green. Regardless of recent price breaks, Bitcoin is doing what it was designed to do, specifically make obsolete the monetary use cases of government currencies. Through free market adoption, Bitcoin is exposing the inflationary nature of fiat, especially to those that are saving in Bitcoin for an extended period of time. Today we're going to discuss a store of value. But before highlighting the fundamental use case, props to Marathon Digital Holdings for putting the heat from Bitcoin ASIC miners to good use. Have you heard? In Finland, they launched a 2 megawatt pilot project to warm a community of 11,000 residents with recycled heat from Bitcoin mining. Efficiency is value creation is profit. Sounds like the future to me. Check out their website to learn more. Like I promised, here's the first video, and honestly my favorite for a few reasons. Let's watch. If Bitcoin was just right now apex money in the world, how do these levers change, or how are they impacted?
All prices relative to Bitcoin fall forever in that system. Now, it'd be volatile on the way, but all prices forever will fall against Bitcoin. So what does that mean for a government? What are they going to have to do? They're going to have to move, instead of preying on you and stealing from people to be able to expand government, they're going to have to serve you. And voters will choose over more and more. Voters, Milei in Argentina, Bukele in El Salvador, and voters will choose what services governments wants, and governments are going to have to get a lot smaller in the free market because you won't be able to survive off stealing from other people.
Why my favorite? No lie, it's cool getting a little screen time with Mr. Price of Tomorrow, but his framing is so important. Prices have and will continue to fall against Bitcoin. The free market value of a new fiat unit carries less coercive energy every day Bitcoin is in existence. That means in order for governments to function in the future, they must offer something you want. Something so rational, yet so alien because of the systemic monopoly. But now we have a choice, and that choice is improving every day.
By switching to an easy money, where now, in the 20th century, we moved to government money, which has been increasing on average, I calculate at something like roughly 14% a year globally. So you move from a money supply that's being inflated at 1 or 2% as the average human being in the world. You had that same gold coin. Now you're stuck with your government's local scrip that is inflating at, on average, 14%.
14% on average. Unless you're a superstar investor, you're losing your real value. And unless you live in the best 5 to 6 countries in the world, you don't even have a legitimate store of value solution. Can you imagine losing 25, 50, or 75% of your savings in a couple months' time? You privileged Westerners would never ever save money. Even Argentinians, they were buying bricks as a way to store their value to escape the hideous currency that was forced upon them. Now imagine you actually learn what Bitcoin is meant to do for the individual by watching this show, other Swan products, and other champions of economic truth. How long do you choose to sit on that fiat melting ice cube?
So tell us again, Joe Biden, how inflation is at 7%. Read some more government numbers to us. One group that would never even consider believing numbers like these, crap like this, is investors. They're not looking at the consumer price index. They do this for a living, and they know exactly what dangerous inflation looks like, and that's why they're buying hard assets. You see it everywhere. The median sales price of an existing single-family home in Austin, Texas, increased 33.5% in a single year. The median price of a condo around Miami has gone up nearly 21%. Now, real estate in Dade County was already wildly overheated. Now it's a bonfire. Why is that happening? Simple. Investors are afraid. Consider equities prices. The S&P 500 is up 28% in the last year. Now, if you're looking for the real inflation rate, that's a lot closer than the CPI is going to get you. But if you want to know what people who think about money for a living really think about the economy and the value of the US dollar, look at the value of cryptocurrency. Cryptocurrency is by definition a refuge from inflation. People buy Bitcoin when they decide the US dollar is no longer safe. What's happened in Bitcoin? It's up 164% in the past year.
You've heard it before. Forget Bitcoin and put your money in real estate. Well, the median home price now, today, is $420,000, and 20% of that for a standard down payment would be $84,000. How long would that take, to save? So in contrast, in 2004, the median home price back then was $212,000, roughly 50% less. And how about salaries? Well, there's no better measure than the source of our problems, the federal government Office for Personnel Management. Now, I'm going to look at my notes here, and I'm looking at two tables, one from 2004, one from 2024. Base pay for government employees, not including locality increases, like if you were living in LA or New York City. So I'm going to use the GS15 step 1 as an example, but the ratio is pretty much the same all around. $123,000 in compensation in 2024 is approximately 40.7% more than the $87,000 for the same role in 2004. But the $420,000 is 97.8% more to buy a house in 20 years' time. Now, if my math is mathing, even working for the entity that prints its own money still causes its employees to work 40.6% harder for that same down payment buying power, only separated by 20 years. That barrier to entry only continues to rise as long as it is prepared for in fiat. I want to hear from you in the comments about compensation changes in other industries in the last 20 years, likely even worse off. When will people acknowledge the clear evidence that this fiat system is only a benefit to a parasitic few? The inflation debate will sometimes take on a centralized Marxist perspective. Check this one out.
These companies are making record profits. Like when they keep talking about controlling inflation, they keep talking about we got to raise the interest rates and try and retame this tiger. And it's the only thing you can do. And yet, there is one other thing that we haven't ever considered, and that is these companies don't necessarily have to jack up their prices.
The amount the prices have been raised is far more than the cost of putting those products on the shelf. So it's just a choice.
It's just a choice. Yeah, those greedy corporations with arbitrary price increases. But what about the local convenience stores that are going up in price as well? You would think the liquor store on the corner would maintain much more fairer prices than the publicly traded evil grocer and wholesaler. We should all be flocking to every mom and pop mini mart to take advantage of the arbitrage on a bag of potato chips. They didn't think of that loophole. It's almost shocking that this type of dishonesty gets views, but look who Stewart has as a guest on his show.
We reached out immediately. Her name is Lindsay Owens. She has a PhD. She's the executive director of the Groundwork Collaborative, was also an economic policy advisor for Senator Elizabeth Warren, Sociological Association Congressional Fellow, a teacher on domestic poverty inequality at Georgetown University, which is a fine, fine institution. Lindsay Owens, welcome to The Problem. Nice to see you.
Thanks for having me. It's great to be here with you.
A Liz Warren acolyte. Mr. Stewart, I think her type has been the problem for a long, long time. The irony is these politicians and their Hunger Games status supporters want everything regulated except for their own power. Like Jeff suggested in the first clip, Bitcoin regulates governing powers where they must actually provide you with the service you want through market dynamics, not mandating some bright idea that a few people came up with in a closed room.
A conventional view of inflation as CPI understates the human misery that's inflicted upon the working class and on mainstream companies by the political class. And so it's a massive shift of wealth from the working class to the propertied class. It's a massive shift of power from the free market to the centrally governed or the controlled market. It's a massive shift of power from the people to the government.
A shift of power. That's all monetary debasement is. Value creators get less, rent seekers get more. Businesses get less, politicians get more. Individuals get less, crony corporate friends of government get more. It doesn't matter who you vote for, this central banking system was built to do this. Heads I win, tails you lose. But they lost the ability to steal from you in secret. Monetary debasement is out of control. Runaway debt like an animated snowball. The only question is, do you want to take the steps to get out of the way? Or do you become a casualty to parasitic greed? I am Sir Ulrich, like my father before me, and I leave you with this.
So when you're actually inflating the money supply at 7%, but you're calling it 2% because you want to help the economy, you're literally bleeding the free market to death. But the sad fact is George Washington went along with it because he thought that they were going to do him good. And the majority of the society, most companies, most conventional thinkers, the working class, they go along with this because they think that someone has their best interest at mind. And the people that are bleeding them to death believe they believe that prescription because their mental models are just so defective, and their understanding of energy and engineering and the economics that are at play is crippled.